Hey, it's Soleil, and this is episode 217 of the Orange Pill Investor. And today it's midweek, so I just want to talk about going over planning for Friday and just thinking about what I will be doing with some of these contracts. Now, it's going to be interesting. I actually got exercised a day early on Thursday. Uh, when I woke up on Thursday morning, I had actually gotten exercised, but that was on the puts that I sold at 144, and I got assigned on those bad boys. But eh, I'm I'm kind of guessing that if I handle rolling these Friday morning, they won't get uh, exercised. But if somebody really just wants to exercise these options at 116, they could do it. I mean, hell, they could be clicking that exercise button right now. But I might have gotten a little, too cute or tried it one too many times. But these, at the money covered calls had been printing for the last couple of weeks, but now clearly, unless MicroStrategy takes a dump before the end of the week, I will either be paying to roll these, or I'll just have to let a couple of them get get called away at 116. And I had already done that other video where I had identified that these long calls that I had been stacking were not keeping up with the number of shares that I had, so it was not really fully insuring them. I went to optionsprofitcalculator.com and I looked up what would be a reasonable pump for the week. Like if the price went from 116 up like 20% to what, another 25 bucks to 135, 140, um, these calls would appreciate, but I probably needed about 500 uncovered delta per 1,000 shares. And what is that? I'd need 1,000 and then half of 300. So I'd probably need like 1150. And because MicroStrategy had been collapsing, the the price of these long calls and the amount of delta that they represent was collapsing faster than I was accumulating it. So I should have paid attention to that. I should have peeled off some more buying power and added to this position. It's not the end of the world. Anything that wouldn't be covered by these long calls, I can just let the shares get called away. So I'll take a look this Friday, and I had considered either not selling covered calls on Friday or maybe just taking them off the day before the rate cuts are announced. If rate cuts are the announcement, they could do nothing. If they raised rates, I think the market would absolutely lose their freaking minds. But and this is maybe conspiracy theory type stuff, but I don't think it's too outlandish. This is their last chance, really, to cut rates and try to pump the market before the election. So, no guarantees that they'll cut rates, but if they're trying to get reelected, they may, they might have engineered that. So, not sure I want to sell covered calls this week. However, when the price is up from, recent events, that's when I that's when I really start licking my lips. So that's when I want to sell covered calls, especially since I'm going to have to pay to roll. I would love nothing more than to open up some new covered calls and offset the money that I'm going to have to pay to roll. But we'll see. And it's not an all or none scenario either. With 2,300 shares, I could sell covered calls on half of them, or um, you know, since I want this to be approximately 1,300 uncovered delta, I could go ahead and let's see, 624 and 315. It's about 940. So I'd need another 400-ish. So I could leave 400 of these shares uncovered, depending on how many long calls I want to add this Friday. So we'll see, but it's good to be looking forward a little bit about what decisions you're going to make, so that you're not sweating it on Friday and trying to figure out what the next plan of action is. There's a lot of hype around Uptober, and it could be that September will be the last down month, and then we'll get a nice pump for the rest of the year. Who knows? So I, for nothing more than just, being a little paranoid, I may, I may stop effing around with these at the money covered calls, at least by the end of September. Being that we had I don't really do technical analysis. There's some options traders that I respect that do, but I do have the 50 and the 200-day moving average on here, and that's really nothing more than to figure out what macro environment I'm in. So back in March of 2023, we've got the golden cross, and it's been, up ever since. Back here is the death cross. In January of 2022, I guess if you had gotten out here at 63, you could have prevented yourself from riding it down to 23, and then you could have gotten back in. But this is just kind of an overall market indicator, and really I'd probably want to know what the market is doing. I'd want to look at the SPY. As long as the 50 is above the 200, I would consider that, a bullish environment. But yeah, so that's the only thing. I just need to tweak this. I don't quite have as much upside protection as I probably need. When I had 2,000 shares and 1,000 worth of delta in these long calls, I think that was pretty reasonable. But I've been adding shares in on the dips, but since my delta on these has been getting wrecked so hard, I haven't been able to keep up with the upside protection. So I definitely need to remedy that. And this is actually a huge departure from my normal strategy of just collect 1% a week, add shares, constantly adding to my position. Once I kind of had an aha moment about MicroStrategy, I was like, oh, I need to just get as much leveraged long positions as I can possibly stand. And, obviously that has not worked out since I went all in at 141, I think is my average MicroStrategy cost. So it's down, a good chunk since then. We've been up and down, up and down. But my opinion on MicroStrategy has not changed, and I think it's only a matter of time before it rips. Not financial advice, of course, but as MicroStrategy was kind of collapsing and Tesla was pumping, I used that as an opportunity to unload a bunch of Tesla positions and continue to add to my MicroStrategy stack. And I've pretty much decided that trash. I'm sorry, cash is trash. So I don't really want to trade even when I'm taking profits. I don't want to trade for cash necessarily. So I like having Tesla around as an asset that I believe will also appreciate relative to fiat that I can kind of use as rebalancing. And part of my master plan is that at some point during 2025, if Tesla is still a bargain, that's what I'll be moving into when I take profits with MicroStrategy. And I know there's no second best. However, Bitcoin's appreciation has to start getting some kind of diminishing returns. It can't just go up 40% forever. I think we're probably good at least for the next 10 years, um, maybe more. But at some point, Bitcoin will start being probably uh, a much less volatile uh, asset, and eventually, once Bitcoin has imposed the free market on the current corrupt system, there will be other things to invest in besides Bitcoin. Like right now, investing in another company is rolling the dice because you don't know if their valuations are real or if it's just smoke and mirrors that they're able to, little shenanigans that they're able to pull in the current corrupt system. But eventually, when the free market is running in a way that it has never run before in human history, people with savings will look at companies that are going to do something amazing, and some of them will actually be worth maybe coming off of some Bitcoin for. And I'm guessing that Tesla will probably be one of those companies for the next couple of decades when there's more humanoid robots on the planet than actual humans. I think Tesla will be printing money, but at that point, maybe it'll be like fucking Star Trek, and money won't even be necessary. So who knows what the future is going to look like? I'm just eating a bunch of red meat, so hopefully I'll live long enough to see it. But yeah, that's just a little preview for where my head's at. I'll either let some shares get called away, or I'll peel off a few long calls to pay for rolling these, or depending on how many covered calls I roll, maybe it'll help pay for these. We'll see. So, no need to panic, and I'm happy every time MicroStrategy goes up. I don't care in the slightest that it's over my strikes, and the only thing that matters is that you know the overall account value this week is up. So I cannot complain. It's not up as much as if I didn't have these covered calls on here, but that is also the point. So the covered call strategy isn't necessarily supposed to be the optimal strategy for making the absolute most money. If I wanted to do that, I would just unload all of my shares completely and buy nothing but long calls out to December of 2025 and just sit on them and wait. But then I wouldn't have anything to talk about in these videos. So the point of this strategy is to reduce the cost basis, which increases your chance of success. And I think the chances of MicroStrategy's success is already so freaking high. It probably doesn't need this strategy to perform, but I enjoy it, and we'll see. It doesn't even with MicroStrategy. I don't even think the strategy has to be optimal. It just has to be bullish. I think all the bullish MicroStrategy um, strategies are winners. So that's a good news. Looking forward to October if that happens. And be good, Joe.